Thanks very much, Elaine. Indeed, a very big day. The landmark Stock Connect scheme between Hong Kong and Shanghai is now open for business. And this is the first time investors from both cities will be able to buy stocks from each other without government regulation. Now, some say the exchange may lead to the creation of the world's third largest stock market. And Cathy Yang has been following this. She joins us live from Hong Kong with the latest on day one of trading from the city. Cathy.
Well, it was momentous, Michelle, a milestone in global capital market development, and it ended with no glitches on its first day. While the initial euphoria in Hong Kong petered out towards the end of Monday's session, the fact still stands: the Stock Connect scheme brings on so much more opportunities than investors around the world has ever had. The scheme allows all investors in Hong Kong or overseas, retail or institutional, to buy shares in the Shanghai Stock Exchange, while also allowing investors on the mainland to buy stocks here in Hong Kong.
3, 2, 1. Shanghai Hong Kong Stock Connect has begun.
Finally online. After a 3-week delay, the landmark Stock Connect scheme is now a reality.
This is a scheme of historic significance to both Hong Kong and mainland stock markets. With the launch of Stock Connect, institutional and retail investors in Hong Kong and from overseas will be able to invest directly.
Shanghai Hong Kong Connect really present a new opportunity of investment, a new partnership model, and ultimately is really the beginning of a new era.
The launch marks a delayed start to cross-border trading, widely expected to begin in October when Hong Kong saw the height of street protests disrupting business. The link opens up some $2 trillion of investment options, estimates UBS. Here at First Shanghai Holdings, one of over 90 brokers in Hong Kong taking part in the link, the first hours turned out without hitches, says Executive Director Elliot Lee. Brokers had earlier expressed concern about a potential crunch on day one, saying many investors could struggle to get their orders filled. The discount between the A shares and H shares has disappeared, mostly because of Shanghai's strong performance. The opportunity now has moved beyond just short-term, momentum-driven investing.
I think more capital would be going into Shanghai relative to Hong Kong, even though some of the mainland capital could move out this way as well. With the Connect program opening, you actually suddenly, for outside investors, you're getting access to 560 plus stocks. Many of the stocks in many sectors are not otherwise available for overseas investors outside China. In terms of attractiveness and value proposition, the Asian market offers a lot more potential.
And Michelle, the Stock Connect launch coincided with the lifting of the yuan conversion limits for Hong Kong residents. Prior to the lifting, residents here in Hong Kong had been bound by a $20,000 yuan conversion limit. Now that works out to over $3,200 US. As to the waiving of the capital gains tax, that move came in just before the weekend, a last-minute decision by Beijing that cleared up the final gray area for foreign investors. Following the initial euphoria that came with the launch, the Hang Seng Index ended lower over 1% on Monday. Michelle?
Cathy, it was certainly a big day. Hong Kong shares filled up their quota. What has been the reaction from institutional investors? What factors are they looking out for?
Yeah, many are still on the sidelines, Michelle, waiting to see how things work out in the next couple of days. An asset management company CEO told me that his clients are interested, and these big investors he's got, they're in for the long haul. Once they sink their money into Chinese stocks, they just want to keep them there and make their money grow. But they just want to watch and wait until all the glitches, if any, are smoothed out and see how the system works out, basically. Back to you, Michelle.
All right, thanks. It's always great to report. Cathy Yang live in Hong Kong.